Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your financial market update, and this is for the end of trading on Thursday, and this is the 23rd of March 2016, getting onto the 440 time frame. Before they clear the boards on me, which will be in just a moment here, you can see we settled lower in the stock market, gold down a little bit, silver gained on it, dollar up a fraction, and all the other markets sort of meandering back and forth, and here's why. We don't know when the vote's going to happen on the new Health Care Act. And we don't know the outcome. We don't know if it's going to be on Friday. It might go over the weekend and run into Monday before it comes up. It may not come up. You know, if the president can't get enough people on board, what the heck's he calling a vote for? Just for the sake of losing? Doesn't make any sense at all. Then you're going to hear about a filibuster tomorrow that Chuck Schumer is calling for our Supreme Court nominee, Mr. Neil Gorsuch. So what is really taking place is, I hate to say it, but politics interfering again with marketplace. Because if nothing gets done, if it's all going to be bucking heads, this market's overvalued. And that's something you got to be fearful of. The other side of the deal, get something passed through, and maybe the Trump campaign can move forward. It's hard. So you came down today, and what the market is saying in plain English, and if you look at the weekly chart, is that we're in a down thrust right now, starting to give back the Trump rally. How much we'll give back? Don't know at this point, but we've begun that process. You see that a bit as you're looking at the market come down here, which is also in a down thrust, and this is a daily area chart of just closes, where now we're 50 points lower on the S&P from its peak. You can see the chart here is not looking good. I mean, if there were none of this politics going on, I'd be saying, well, gee, you're getting into a phase here where the market looks like it wants to drop away. And you see that right here as we're getting lower highs and lower lows, right? When we take a look at where moving averages are, because so many traders use them as ideas, as neutrality, as the market got bullish bias, bearish bias. Well, you've got bearish bias. You're under the 18-day average, the shorter term average. You've got a pattern on the swing line of lower highs and lower lows, but you're in a support zone, the lower Bollinger Band. You take a look at that, and next you take a look to see what are you doing in terms of market momentum, because momentum, I believe, leads price. It is oversold, but still pointing down. So you need to get something to support the market, and that something should come in now unless you're going to break out to the downside and start the path down here. If you do, let me scare you. You're at 2340. The next support is the 100-day average at 2260. It could get nasty if this market wants to get away from here. Most of the stock indices are at key spots. They're at the lower Bollinger Bands in oversold condition as the market's trending down. NASDAQ, lower highs, lower lows. Didn't hit today, the lower Bollinger Band. Did yesterday. Bounced back to the 18-day average. But if it heads lower, that number's in play. And of course, take a look at what you hit in the Russell. So my point is that you're oversold in a number of markets at the lower Bollinger Bands. Get a good piece of news, they're going to pop. Get a bad piece of news, and do you start moving these bands further away and really start a correction that could get ugly? You're at that point. There is no reason to be bullish on any of these charts. That's probably the most important thing. Knocking on the door and getting ready to scare the heck out of you could be where the VIX moves out to the upside. Now remember, if it does, look at all this sideways action. This is a monster base if the market breaks out to the top side. A monster base that could go back into the 20s. Think of what that does, maybe higher, to the stock indices. Get nervous. This is not a time to be bold in the marketplace. When we get to the 30-year bonds, you know that you've had uncertainty, and that uncertainty's created buying. The market got up to the 100-day average in an overbought condition, and it is stalled out. It's not breaking yet, but it's stalled. 10-year notes, the same thing, overbought, stalled out, the combination of the Bollinger Band and 100-day average. And when you go to the dollar index, you're still hugging this line as you're dropping away in this market. Got to be nervous here. This dollar index under a lot of pressure. If we can't get anything done, isn't the dollar overvalued at that point? And that's what this market's telling us. When I say if we, being our government, can't get anything done, from Supreme Court nominees to votes for, just votes, to get small bills passed. Even if the House bill passes, you do understand you got the Senate you got to go to. They'll never accept all of the House bill. That's going to end up going back to the House with whatever the Senate does. Who knows where it ends? We can't get to first base, let alone get around the field to get something done. I'm laughing because it's a joke. It's embarrassing for the Republicans. Take a look at the higher lows, higher highs against the upper Bollinger Band. It's the flip-flop of the dollar index. Look at the British pound. All the Brexit news, you've recovered this market. If we take a look, you're getting back into this high area, get up to 127, which is only a point and a half away, and you're back to those highs. It's amazing that you haven't been there for a very long period of time. Certainly not the day of Brexit, which was higher, but you're back to the recent highs, and that's important. It's not acting like a bear market, is it? But it's very overbought, and I'll ask you a question, and this is the beauty. Would you be a buyer at that number into the Bollinger Band in an overbought area on the first challenge over the 100-day average closes? When we have a webinar again, I'll let you answer that. In the Japanese yen, it's like the British pound. This is the safety buying. As America acts dysfunctional, these markets are starting to get bids against the dollar. Higher lows, higher highs, overbought. Would you buy into a Bollinger Band over the most recent test of the 100-day average? You ask yourself that question. Crude oil, still sicko. Lower highs, lower lows. There's nothing good on this chart. You've got an embedded reading and it looks lower. And the rebob gas even fell back. Now, it's not an embedded reading because you've been out of that situation. You just plain today got oversold on this break. But this is where I think the market's trying to, its darn best to base out. We'll see if it's able to do that. And when we get to the nat gas, you have a situation of a lower low and a higher high. Now, just not taking out today's lows tomorrow will establish a pattern of higher lows and then the higher high. The dilemma is it's an ugly chart pattern when you have to buy into the 100-day average and the upper Bollinger Band. That doesn't make sense with an overbought condition. So there's a point at which you put your hands in your pocket and you go, maybe I stay away from those markets until I got the chart patterns I want. That's up to you, of course, but that's what you have to ask yourself. And with that in mind comes our research from Linn and Associates. Now, this is not research we buy and send out there. This is research we generate in most cases. And we've got people writing all day long. So let's assume you want to trade sugar. What's going on in the market? Who's doing the buying? Who's doing the selling? Let's assume that you like pivot point analysis and you want to know the numbers for the different markets on the pivot point analysis. We provide that for it. What if you want to know grains? Who's doing the buying, selling? You had today some export numbers. Were they friendly or not for the cotton markets, the others? Well, you can pick the categories you want to work with, and you will get reports, and this just shows you what they look like. They're all delivered by email into your inbox throughout the trade day and through the evening. Yes, our staff eventually goes to sleep, but I promise you, by 5 in the morning, you're getting your emails because my staff gets up early. They're writing. By the time we get into the office, they've got all the data we need. Why don't you take a look and see what our customers have access to? How do you get it? And it's a free trial for a couple of weeks. Call us. Go to our website. You can see it there. Click up here if you'd like. It's the Linn Research, but you'll see an icon if you're watching me on YouTube up there, or just click under us on some of the websites. It says click here, work with that. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow.